You didn't crash. You didn't speed. You didn't do anything wrong. But your insurance just went up 20%. Why? Because your car told them you braked too hard 3 weeks ago. In 2026, your car isn't just a machine, it's the biggest snitch you own. Most people think they own their car, but behind the scenes, it's watching, tracking how you drive, where you go, even how hard you hit the brakes. And that data? It's being sold to companies that feed it straight to your insurance. Today, we're exposing how it works, who's involved, and how to stop it. So let's start with the obvious question. What exactly is your car collecting? Most people assume it's just speed, maybe GPS location, but the reality is far more invasive than that. Your car is tracking hard braking events. Every time you push the brake pedal sharply, it's logged. Rapid acceleration. Every time you gun it off a light, that's logged too. Seatbelt usage, whether you buckle up or not, and how quickly. Cornering behavior, how hard you take turns. Time of day, when you drive matters more than you think, and we'll come back to that. And geolocation, not just where you go, but how long you stay there. Now, here's where it gets really clever and really devious. A lot of this data isn't collected because you signed some buried clause in your purchase agreement. It's collected because you opted in, voluntarily. You just didn't know what you were agreeing to. You've seen the programs: Safe Driver Rewards, Smart Driver Discount, Drive and Save. They sound great, right? Save money by being a good driver. What could go wrong? Everything. These programs are built on telematics, technology that monitors your driving and feeds data back to the manufacturer or an insurance partner. You agree to it, often through a checkbox you scroll past in a mobile app during setup. And once you've opted in, the data collection doesn't stop at what was advertised. But it gets worse, because there's a second data collection point that almost nobody talks about: the sync scam. The moment you plug your phone in for Apple CarPlay or Android Auto, you may be granting your car's manufacturer permission to access your phone's data. Contacts, text message metadata, call logs, app usage patterns. Now, to be clear, the car companies will say they're not reading your texts, but they are logging the metadata. Who you contacted, how often, what apps you were running. And that data gets bundled into a behavioral profile attached to your vehicle identification number, your VIN. Your VIN is essentially your car's social security number, and now it has a behavioral history tied to it. So who's actually buying and selling all of this? Let me introduce you to two companies you've probably never heard of, but who almost certainly have a file on you: LexisNexis and Verisk. These are data brokers. They sit in the middle of the ecosystem, between automakers who collect the data and insurance companies who want to use it to price your premium. Here's how it works. Your automaker collects driving behavior data from your vehicle. They sell or license that data to a broker like LexisNexis or Verisk. The broker compiles it into what they call a risk profile, a behavioral dossier on you as a driver. That risk profile is then sold to insurance companies who use it to decide how much you pay for coverage. The critical thing to understand is this: you never authorized LexisNexis to have a file on you. You never signed a contract with Verisk. You have no relationship with these companies, but they have a detailed one with you. Now, you might be thinking, surely there are laws against this. And you'd be right that regulators are finally starting to notice. In 2025, General Motors and its OnStar division reached a settlement with the Federal Trade Commission. The FTC found that GM had been selling driver data to insurance companies without clearly informing customers. As part of that settlement, GM was banned from selling data to brokers for 5 years. 5 years, not permanently. 5 years. And here's what the settlement didn't do. It didn't stop anyone else. Ford, Toyota, Honda, Hyundai, Stellantis, Volkswagen Group? The FTC action applied only to GM. Every other manufacturer is still operating in what legal experts are calling a gray area, meaning they're doing it, it's arguably legal, and regulators haven't caught up yet. How much is your privacy worth to these companies? Honda and Hyundai were found to be selling driver data for 61 cents per car. 61 cents. That is less than a pack of gum. That is less than a postage stamp. They are selling your privacy, your location, your braking patterns, your daily routes for the price of a gumball. And they are doing it at scale. Millions of vehicles, millions of profiles. The math adds up fast for them. For you, it adds up differently in your insurance bill. Let's talk about what this actually does to real people, because this isn't theoretical. This is happening right now to drivers across the country. Think of it like limp mode, that emergency state your car goes into when something's wrong and it cuts power to protect itself. Except this is limp mode for your wallet. Insurance companies receive your telematics profile. The algorithm runs. And if your score falls below a threshold, maybe you had a rough month, maybe you were navigating road construction, maybe you had to brake hard 3 times in a week, your rate goes up, or your policy doesn't get renewed. We've seen documented cases of drivers being dropped by their insurance companies based entirely on telematics data. Not accidents, not tickets. Data. Behavioral data they didn't even know was being recorded. But here's the part that should make you genuinely angry, because it's not even about your driving. These algorithms use risk scoring by geography and time, meaning the system looks at where you live, what neighborhood you drive through, and what time of day you're on the road, and it adjusts your score based on the average risk of those factors, not your actual risk, the average. Night shift workers are penalized simply for driving between 11 p.m. and 5 a.m. because statistically, more accidents happen at night. It doesn't matter that you've driven that route 500 times without incident. The algorithm sees driving at 2 a.m. and flags it. People who live in dense urban areas or who commute through high-claim zip codes get penalized for driving in those areas, even if they've never filed a claim. The system isn't measuring how safely you drive. It's measuring how safely people like you drive and charging you for their behavior. That's not insurance. That's a racket dressed up in data. Okay, enough of the problem. Let's talk about what you can actually do right now, tonight. There are 3 steps. I'm going to walk you through each one. Step 1. The app audit. Open your manufacturer's app. That means My Chevrolet, Toyota app, Ford Pass, My Hyundai, Honda owners, whatever you use for your specific vehicle. Go into the settings. You're looking for a section called Data Privacy Portal, Driver Feedback, Connected Services, or Vehicle Data Sharing. The naming varies by brand, but it's in there. When you find it, turn it off. All of it. Every toggle that relates to driving behavior, location sharing, or connected data. While you're in there, also look for any active telematics programs, Safe Driver, Smart Miles, anything with a driving score. Opt out of all of them. Yes, you may lose a discount. That discount is not worth what you're giving up. And if you've synced your phone to the car via CarPlay or Android Auto, go into your phone's settings and review what permissions the car manufacturer's app has. Location, contacts, background data. Revoke anything that isn't essential for basic navigation. Step 2. Request your report. Under federal law, specifically the Fair Credit Reporting Act, you have the right to request a free copy of any consumer report a data broker has compiled on you. Go to lexisnexis.com/personal-privacy and request your consumer disclosure report. Do the same at verisk.com. Look for their Consumer Access Request portal. Both companies are legally required to send you what they have. This is important for 2 reasons. First, you get to see exactly what information they're holding, and it might surprise you. Second, if the information is inaccurate, you have the right to dispute it. And inaccurate data in your risk profile can be directly responsible for rate increases. Give it 2 to 4 weeks for the reports to arrive. When they do, go through them carefully. Step 3. The opt-out letter. As of 2026, a growing number of states have enacted or expanded consumer data privacy laws that give you the right to formally opt out of the sale or sharing of your personal data, including driving data. You can send what's called an opt-out request directly to your automaker's privacy officer. This is a formal written request sent by email or certified mail stating that you do not consent to the collection, sale, or sharing of your vehicle's behavioral data with any third parties, including insurance data brokers. Most manufacturers have a designated privacy contact, usually found in the privacy policy section of their website. Look for language like privacy officer, data subject request, or do not sell my personal information. The law requires them to honor it. Keep a copy of the request and any response you receive. Now, will all of this completely eliminate data collection? Honestly, probably not. Some data collection is baked into the vehicle's core functionality, but these steps will significantly reduce what's being shared, stop the flow to brokers, and give you a legal paper trail if you need to push back. The point is to make it harder for them, and to make it clear that you know what's happening. Here's the truth. The smart car is smart, just not for you. It's smart for the companies making money off your data. You paid thousands for that car, and it's still working against you, reporting how you drive without you seeing a single dollar. You're not the customer, you're the product. So tonight, check your car app. Look for anything tracking your driving. If you find it, drop the brand in the comments. We need to expose who's still doing this. And share this with someone whose insurance just went up, because their car might be the reason. Drive smart, stay private.